AMD shares are up sharply this morning in reaction to a dynamite quarter.
The generative AI tailwinds are stronger than the CPI headwinds.
NVIDIA. Own it. Don't trade it.
It's no surprise that these companies have surged in demand for their products, and it shows in their stock price. The real surprise is how quickly it escalated in the past year. OpenAI launched ChatGPT 18 months ago, and now there are multiple large language models chasing in its coattails. And given that ChatGPT grew to 1 million users in just 5 days, that's pretty astounding compared to Instagram taking over 2 months and Netflix over 3 years. Technology stocks personally helped me to retire after 15 years of working, and picking the right investments isn't always about today, but rather it's about the value and innovation that the company can provide in the future. And in my opinion, we are in the beginning phase of artificial intelligence, with semiconductors being the first domino to fall. When we look at this graph referencing the mobile internet, the first sector to spike was hardware in the gold color, and it continued for several years after. Then the green section of tools and technology grew quickly, and then the applications in blue came mostly towards the latter part of the cycle. And I believe that to be true with AI, where the semiconductors and hardware are surging today and will continue to be in high demand for several years. That's why it's still a great opportunity for investing today whenever there's a dip in price. But I want to point out that this graph literally gives us a blueprint of what we want to invest in today in the AI lifecycle, and then write it out for the best growth over the next 10 years. And the expected AI growth is estimated at 36.8% each year for the next 8 years. And that's why I'm covering the 5 semiconductor stocks that are on my radar for this month. Granted, the list of semiconductor companies is broad, with the likes of nvidia only making up 9% revenue share. And here's a quick listing of the companies that I'll be speaking to today, and I'll explain why they're important and how they stand to keep growing with AI. If I had enough time, I'd speak to TSMC, ARM, Intel, Micron, and Analog Devices, but I'll save them for another time. As for today's list, I'm not showcasing any particular one, as I believe that they are all worth having in a portfolio. I'll start with a small player of Marvell, that is one of the lesser-known semiconductor companies that support many of the larger players within AI. They have 4 major parts of their business, which is data center, enterprise, carrier, and automotive. The carrier portion is specific to cell phone carriers and their networks, while the enterprise part of the business is primarily networking, data processing units, and switches. The carrier and enterprise areas are cyclical and stand to improve this year. But the 2 shining stars that I expect to see the most growth is from their automotive and data center businesses. And a few major reasons for me to be excited is because their data center business dropped year over year and the stock price adjusted for it. But Marvell is working closely with Amazon and probably Alphabet, along with its newer speculated customer of Microsoft, to create custom AI processors. And its newest customer, which people are speculating is Microsoft, won't even begin production until 2026, which means that their current production and capacity are maxed out, which will play out favorably for its stock for the next 2 years. This happens to be a smaller company in the semiconductor industry, but I see it as having extremely long-term growth based on its customer base. In fact, analysts see it as having some decent upside of around 25% on average this year alone. This happens to be a cheap long-term play in my portfolio that may have another bumpy quarter or two due to Marvell's legacy enterprise businesses lagging a little bit behind. But the data center business is where the true potential lies, and it's going to be picking up a lot more momentum. And clearly, a company I have to highlight is nvidia. And I realize that most of you see them as a no-brainer stock, but they have a lot of runway ahead of them for a few different reasons. Take into consideration that Meta purchased over $9 billion worth of GPUs for 2024, which is twice as much as Microsoft had bought in 2023. And that $9 billion purchase would bump NVIDIA's revenue on H100 chips nearly 50% if all customers buy at their current rate in 2024. But many people speculate that all their future growth for the year, it's already baked into the stock price. And I'm also guilty of often going back and forth questioning its room for growth. But NVIDIA just announced that its lead times for H100s is dropping nearly in half, from 4 months down to 8 to 12 weeks. But in pushing the boundaries further, NVIDIA announced the Blackwell GPU, which is a new chip architecture for inferencing. And it's called the B100 chip, which boasts being 2 times faster than the H100, while NVIDIA states it will cost only 40% more. This level of news has analysts predicting roughly an average stock price of $1,075, which is up about 22% for the year. As a point of reference, nvidia has its capacity booked out for the entire year, and their growth for their data center business isn't slowing down anytime soon. It's true that everyone is looking to take market share from nvidia, and it doesn't matter if they do. I believe that there's going to be so much demand for the next 2 to 3 years on GPUs that it will have little to no impact on nvidia simply because they're already operating at full capacity on product that already outperforms their competitors.
And I think that we can all stand behind having an investment that outperforms its peers, which aligns well with the fact that a certain asset class has outperformed real estate, gold, and the S&P 500 between 1995 to 2023. And that asset happens to be fine art. Today's sponsor, Masterworks, along with its knowledgeable experts, can help us everyday investors to invest in fine art, just like the ultra-wealthy have done for years. This happens to be blue-chip contemporary art from artists like Picasso, Banksy, Monet, and even Basquiat. These upper echelon assets that have set records at auctions, Masterworks' expertise has earned them over $54 million in art sales, and they've distributed the proceeds among their investors. And right now you can get 5 free shares once you've completed the onboarding process. Just go to the QR code on the screen or by going in the link in the description below.
The next company to review is Supermicro, which has had stellar growth in the past year, where the stock is up over 700%. As for product, Supermicro specializes in high-end servers that are energy efficient and required for hyperscale data centers and AI applications. One might be concerned about the recent increase in their stock price, but it accounts for full capacity at around $20 billion in sales. But Supermicro announced that they have capacity for $25 billion, which gives upside along with the fact that its margins have been on a tear this past year. With capacity being the bottleneck previously, there shouldn't really be any major upsets in their financials since they're already fully booked. But if they can reduce their costs and improve their margins in any way, it's only going to add upside to the investors. Analysts have the stock with about a 15% potential goodness for this year, and that number will only climb as they improve capacity and profitability. With its base founded in hardware, servers and server demand within the lifecycle of AI has a good 5 to 7 years worth of extreme growth tied to it. And based on that, this is a company that is early in its growth cycle and, if managed correctly, should perform well for many years to come.
Before moving on, I have a favor to ask of you. If you like my content, please consider hitting the like button so my channel could continue to grow. And better yet, I hope that you consider subscribing so you can be up to date with all of my latest content.
The next company I'll speak to is SkyWater Technologies, and it may seem like it's completely out of left field to many of you, and it's essentially my penny stock option in the semiconductor industry. It's a complete wild card, but there's some details worth looking at. For starters, they are domestic and they offer semiconductor development and manufacturing in its fab facility. They are a foundry for low-volume, high-value next-generation technologies, which can create innovative dexterity to larger companies looking to create one-of-a-kind technologies. They look to fill a niche that no other foundry is focusing on today. One customer in particular is the Department of Defense, where they create radiation-hardened silicon technology which could be used in advanced radar research and aerospace, which, surprisingly enough, I have a background in radar and miniature microelectronics in the aerospace sector. But the more interesting and potentially lucrative areas are in biohealth and quantum computing. They have been working on applications like rapid diagnostics and genetic sequencing in the health sector. And they've been highlighting their ability to go from lab to fab for quantum computing with its customer D-Wave. And in my opinion, outside of AI, I believe that quantum computing will also create a major jump in technology and investments in the next coming years. When it comes to analysts, they see roughly a 50% upside in the stock, but keep in mind that this is a startup company with extreme risk tied to it. This is one where I'll invest sparingly as I expect the stock price to have some major swings to it. The next company to discuss is AMD, where if you look at the market share of data center GPUs, AMD is a tiny fish compared to nvidia. But that's what gives it a great runway for growth, mainly because, as I had mentioned earlier, nvidia is at full capacity, and if all customers want GPUs right now, then they need to shop around with someone like AMD, and they are very competitive, where AMD recently launched their MI300X GPU that is meant to directly compete with the infamous NVIDIA H100S. On paper, the MI300X is comparable or better than the H100, but the moral of the story is that AMD has a solid GPU server option for customers that have immediate demand. And the interesting nugget with this announcement is that AMD has forecasted only $2 billion in sales for server GPUs. But they state that they have far more capacity than that. So I believe that there's a lot of unrealized potential in that area for AMD, especially when you look at the Q3 earnings that had the data center sales flat at $1.6 billion. It's a testament to how superior NVIDIA's H100Ss were in this space. But now AMD, with its open capacity and improved MI300X, should be an easy win in 2024. Adding to that, AMD has seen wild growth in their EPYC data center CPUs, which have an incredible 128 cores per chip, which their market share in those CPUs have grown by over 50% in the past 2 years. And when you look back at the quarterly earnings, you can see that the client revenue was up 42% year over year, and that number will continue to improve if recent projections are correct, stating that people will be upgrading their PCs and laptops at a rate of 8 to 10% for the next couple of years. When you bring all of these factors together, analysts have AMD listed with an average of 16% stock upside this year. But if AMD can take on more business within their server GPUs, where they clearly stated they have open capacity and they have comparable products to NVIDIA, then they could easily beat their estimated forecast for the year. And there you have my listing of my top 5 AI semiconductor stock for the month. Be on the lookout for my review on the top AI software companies that'll be coming out soon. Thank you so much for watching.